Hello, I'm Nancy Zambell, and we're coming to you from the Orlando Money Show here in bright and sunny Orlando. And my guest today is Amelia Bourdeau. She's the CEO and founder of Market Compass. Welcome, Amelia.
Thank you. It's great to be here.
Yeah, we were talking a little while ago about some international event risk. So we never really know what's going to happen, but we try to build that into what our investment strategy is.
Yes.
So what would you say to the average trader? What kind of things would you be looking at to make some profits on?
Right. So it's important to know the event risk, even for the average trader, because no matter what asset class you're holding, there are specific dates, which I mentioned in the previous video, that can kind of throw your investment off. So you just want to manage the risk around those dates. And I think one of the ways to do it is we expect some high volatilities on the dates that I mentioned, through March especially, with the China trade negotiations at the end, and at the beginning, and Brexit at the end. So I like to be long the yen. The yen is a safe haven currency and typically performs well. It's strong against the US dollar in times that are highly volatile. So you can kind of always put that in your toolkit when there's high volatility. The next thing I would do is look at ways to shorting the British pound into that March 29th, deadline for Brexit, and beyond that. I realize that that date is most likely going to be pushed back, but still over the next 3 months I try to be short the pound, because whether through puts, long a put option on sterling, or just holding a cash position, because as we remember, June 23rd, 2016, when the referendum vote came out, the pound was down about 9% immediately. It fell so quickly.
Right.
And the other thing I would do is look for euro weakness. I think it's a great time if you want to go to Europe, because the euro is going to be weak against the dollar. Even though people are talking about the US economy kind of slowing, we're still outperforming Europe, and that's going to be good for the dollar against the euro.
Now, some people were saying in recent things that I've read that the European stocks should be coming back this year. What is your feeling on that?
It's interesting. I think a lot has to do with the European parliamentary elections at the end of May. I think people are watching that very closely. The German equity market has been under pressure because the German economy has been slowing more than people had thought. I still think U.S. equities, are going to actually outperform. Typically, if the U.S. economy slows, the rest of the world slows more. And people kind of look to the rest of the world to pick up growth and to perform better than the U.S. in times of growth slowdowns here, but I find very rarely is that the case. So I prefer actually U.S. equities.
Oh, wonderful. So the U.S. is the place to be.
It is the place to be.
Thank you, Amelia.
Thank you.
And thanks for joining us at the Money Show Video Network.